What's up, family? It's your boy Ronnie, and today is episode 2 of the road to 10K. All right, so today was another rare day. Like, if you follow my chat, I told you, hey, the future's looking bad. And when you check those futures every morning, and it'll let you know what to expect. So I told you ahead of time today was gonna be a bad day. It was gonna be another red day to buy down on your shares if you have the capacity to. If you have the money to buy down on the shares that you already own, it'll be a good day. Like I said, it's another sale. Now, why was it down? Because the stimulus talks. It's still uncertain on that stimulus package, and from fear of a government shutdown, people are pulling their money. Like I said, people are scared. People don't know what to do with the money. People are still in fears of another shutdown like we had back in late February, early March, when everything shut down due to coronavirus. You mean the market kind of tanked for the most part. So people are really trying to get ahead of that. It's almost like musical chairs. Everybody expects us to have another strong dip during the administering of this vaccine. So people are pulling their money out like, okay, is it now? Is it now? Is it now? But as talks get better and the vaccine gets pushed out and everything, the economy will start going back up. You start getting more green days. But we was overdue for some red days anyways, because just the market was crazy bullish. Everything was on the rise. But like I said, check the futures, and I told you that we was in for another red day. But with all that being said, let's take a look at my portfolio. All right, so today my portfolio sits at $2,523.56. That's about $100 less than it was yesterday on the road to 10K. Now, I couldn't buy anything because we're starting with $2,500. We're keep the capacity low to make it more realistic to everybody. So I didn't buy anything in this account, and I really couldn't. But in my chat, I did poll you guys when I asked what was your weekly capacity to invest. So how much money could you put in weekly towards your account to invest? And so everybody said roughly between $50 to $100. So I'm gonna take the $100 option to keep it relative, and I'm gonna deposit that $100 every Friday. So today is the first Friday, so I put $100 in. However, I kind of cheated the process, but not really, because it's something that you guys need to do as well. All right, so this is what I did with my $100. I sat there and I thought, it's $100. What could I do? Because honestly, with $100, I didn't feel like I could really start trading next week either. It would just be another stale week for me, and my account's not moving, and you guys would just be literally just watching me do nothing and not really learning much, except for me just to talk about stocks, not really buying anything. So looked up some stuff, and with that $100, you can join Webull. Now, what is Webull? Webull, like Robinhood, is a brokerage account. However, with a $100 deposit, you can get 2 free stocks worth between $8 to $1,600. Now, I was like, hey, I like my chances to get, if it's 8 to 16, it's still money. Hopefully I get that 16. That pushes me a lot forward towards the road to 10,000, right? So, main account, deposit my $100, and I got 2 stocks. Didn't get 1,600 now. Now those 2 stocks was worth about $8. But it's cool though, because I still made $8 today, and those stocks too can rise. So this is why I say I cheated the system. That $100 I did not deposit into my E-Trade account. I deposited $100 into my Webull account. Now, this is why I say you guys should do it as well, because you always need more than one brokerage account. Why do you need more than one brokerage account? Because if you don't have more than one brokerage account, some stocks are not available by every broker. So if I come across a stock and be like, hey, this stock is gonna do double, triple, whatever, and you like, hey, I'm gonna go check this stock out, and then you type in the ticker symbol, it might not show up on Robinhood. And now you're looking like, hey, what gives? Does this stock exist? Yes, it exists, but your broker might not sell that stock. So you need to have at least 3 brokerage accounts. I have an E-Trade, I have a Robinhood, I have a Fidelity, and now I have Webull. I think all you guys should click the link in my bio and get your Webull account, because it's gonna get you 2 free stocks. Like I said, between $8 to $1,600. One of you might get $1,600. One of you might get $500. But I think during the red days is the best to do it. So like now and like early next week before the 14th, you guys need to hop on this Webull link in my bio and get you some stock while it's low. Because when it goes up, now you got another account, and the stocks that you got for free are going to go up with the economy, going to go up with the market. Hey, it's like I just gave you money. So, hey, click the link in my bio and get your 2 free stocks if you do not have a Webull account. The process took me like maybe 10 minutes, and that was because I was doing other stuff while doing it. But it's roughly a 10-minute process. The approval time took maybe 30 minutes. They say 1 to 2 business days, but that was like this. Now, granted, it's the weekend now, so it may take till Monday to get your approval, but at least you'll get in while the market's red, get your 2 free stocks, and then that's free money. I just gave you 2 free stocks. So even if you don't have a trader's account, for the people that's like, they want to buy their first share, but they don't know how, I just gave you 2 free stocks. 2 free. So you'll become an investor by just joining this account. But like I said, I digress. Just click the link in my bio, and if you have any questions, feel free to ask me. But here's some stocks that I like looking at today. Okay, Disney. If you follow my Instagram, Disney was definitely on my watch list as a stock to watch between now and next year. The reason why I like Disney is because they own Marvel. Simply because they own Marvel. Maybe I'm a superhero geek, whatever. I claimed it. But they own a lot of other channels as far as like for consumerism. The name just is the cartoons, the superhero. They own something else I can't think of right now. But reason why I'm harping on Marvel is because if nobody wants to do business with these theaters due to COVID, they have the ability to release these movies on their own streaming platform, which will drive a lot more consumers towards their streaming media. And that who doesn't watch like the Avengers? Like, who doesn't? Are you serious? Like, imagine if they had another Avengers come out next year, or another can't do Black Panther no more, RP Chadwick, but another Spider-Man or something, they released it on the streaming device. Who's not going to go buy that? Like, it's genius. So I see Disney making some ground come Q1, Q2, Q1, Q2 of next year. I definitely see that happening. So Disney is definitely on my portfolio now. DraftKings, like I've said it over and over, online gambling is growing. I truly believe money, like cash money, is going to become a dying commodity. It's going to become more digital. That's my feelings. I might be wrong, but to invest in cryptocurrencies and to make sure you look at more digital ways of consumerism is a good way to think forward. So online gambling, cryptocurrencies, online streaming platforms versus the old-fashioned movie theaters, all of these things are thinking forward, because that's where we're going. It's probably places now that you like to go to, like restaurants and stuff, that don't even want you to give them cash. And there's a lot of benefits that I can see the government would go to a digital currency, so they can keep track of the money. There's less illegal actions happening. It's easier ways to tax you. Yeah, that's the pro to it. I mean, the con to it. But the pro is to get ahead and be a forward thinker. So that's Disney, and that's DraftKings, which is for the sports. Now, DraftKings it's kind of like fantasy football or fantasy sports. So you pick a group of guys from a team and you say they're going to play the best tonight. And then you put your money in, and then you compare their stats versus everybody else that betted who the other players are going to be the best group of people. Whoever has the highest score wins the pot of money. That's how it works. It's pretty big too. It already got sponsorship by NBA and everything. Look into it. DKNG, I think it is. I think that's the name of it. And I own shares of that as well. What I'm trying to do is get you guys to look at stuff more outside the box instead of hopping on the trendy things and what's hot now, because usually by the time you find out, it's too late. That's how they play it. It's like, okay, we ride the wave up. When everybody gets on it, we ride a little bit longer, then we take our gains. Remember the term I taught you guys yesterday? Is taking gains. That's what we do. We take the gains when everybody else hops on. Now, you got plenty of gains by then. That's how we get the doubles. That's how we get the triple gains, the 300% in gains. That's how we do it. All right, so I want to give you a term of the day. And the term of the day is gapping. Now, the reason why I want to use the word gapping today, gapping is when you look at where the stock used to be and where it is now. And you look at that as the potential of where it can be after things get back to normal. Reason why this is important, because we're on the back end of 2020. Hopefully we all make it out of 2020. It's going to be a rocky road. It looks like it's going to end with a bang. Who knows? Hopefully we got to think positive though. So gapping is the expectation that these stocks are going to do well post-COVID. Now, the reason why I'm bringing this up is because it's time. I've said this in the chat, but it's time to start considering who will benefit the most in a post-COVID area. The number one, my opinion, number one industry is traveling. Traveling is the number one industry, in my opinion, to benefit from COVID. So it's time you guys start looking at airlines and cruise lines and hotels. Even Airbnb, I still think Airbnb is due some correction. It's going down today. But like cruise lines, airlines, they are ripe for the picking. Like I say, doubling money, you hop in on these right now and just wait it out. It's gonna take a minute, maybe April next year. But if you got some money that you not gonna do anything with, it's something, or you got any extra money, you just sit into something and wait on it. That thing's gonna, if it doesn't double, you're gonna get at least half. You know what I'm saying? Like, you're gonna get some money out of it. Now, I personally is gonna double, but I can't tell you that legally. So, my opinion, not my advice to you, I think to invest in airlines right now is a smart move. American Airlines, Spirit Airlines, Delta Airlines, just all of them. I wouldn't do them all at one time, but pick one that you know is going to be in the mix. Like American Airlines right now is very low. I think Spirit's still very low. They're going to be in the airports when you go. Even look at like car rentals, like Enterprise and stuff. People are going to be consuming this stuff. People cannot wait to hop on a plane and travel, to hop in a car and travel, to hop on a cruise ship and travel. Like, this is going to have such a high volume of consumerism come 2021 after COVID that you talking about they might not even need to have full capacity to make the money that they normally make, because people are going to be so willing to travel. But hey, that's it. I just wanted to throw this video out to you guys early. It's Friday. I just wanted to be very transparent. I did take my losses with you guys today, but they were not realized because I did not sell. We're going to ride this red day out, and we're going to ride them back to the green. All right, that's all I got for you. Have a good weekend. Peace.